Amcor plc, NYSE, AMCR. Due Diligence Report, Executive Summary. Business. Global packaging company providing rigid and flexible packaging, specialty cartons and closures to food, beverage, pharmaceutical, healthcare, and consumer customers. Thesis. A defensive industrial with strong cash generation, steady dividend policy, and an explicit strategic shift towards scale and sustainability through large-scale M&A and R&R. In recyclable materials, attractive for income plus quality investors, subject to execution and integration risk from a major acquisition. Investopedia Amcor 1. Company overview and business model. Makes packaging across many formats, flexible films, rigid containers, specialty closures. Sells to large CPG and pharmaceutical customers under long-term contracts and spot orders. Business mixes recurring large volume contracts with project work. Business economics, capital-intensive manufacturing footprint, modest working capital cycle, predictable cash flows at scale. Margin profile depends on product mix, flexible versus rigid versus specialty, and input costs, resins, aluminum, energy, to industry and market position. Industry. Global packaging, consumer packaging, plus industrial packaging. Stable demand tied to food, beverage, and essentials. Pockets of growth in premium beverage, e-commerce packaging, and sustainable packaging solutions. Position. One of the world's largest packaging companies by revenue and scale after recent consolidation. Strong global footprint and deep customer relationships. 3 revenue streams. Product sales across flexible packaging, rigid containers, and closures, with some higher margin specialty and service offerings, design, fill, sustainability consulting. Revenues geographic and customer diversified, but skewed to large CPG customers. For competitive advantages, scale and global manufacturing footprint that provide cost and logistics advantages. Long-standing OEM CPG relationships and the ability to offer multi-format solutions, one-stop shop. Increasing investment in recyclable and low-carbon packaging to meet retailer and regulatory demands. 5. Scalability. Highly scalable by adding production capacity and adopting bolt-on M&A. Organic growth, modest GDP plus share gains. Meaningful scale gains come via acquisitions, category wins at large customers, or faster adoption of premium sustainable formats. 6. Financial statement analysis. High level. Amcor reports fiscal year results on a June 30th year-end. Management furnished fiscal 2025. Fourth quarter and full year results, and an investor presentation in August 2025. Recent reporting and investor materials are the best source for LTM revenue, margins, and FCF cadence. Refer to the fiscal 2025 release for the latest line items. Sec 7. Key valuation metrics: how investors typically view Amcor. Market cap, scale large cap packaging peer. Market cap in the billions varies with market moves. Use realistic LTM EPs and adjusted EBITDA for PE and EV. EBITDA. Current yield, PE and EV EBITDA are best pulled live. The company trades at a premium discount depending on cycle and M&A headlines. See current market data. Macro trends 8. Growth potential and TAM. Global packaging is a multi-$100 billion market. Growth drivers: premiumization, e-commerce packaging, convenience formats, and sustainable recycled solutions. Amcor upside. Gains if it successfully integrates major acquisitions, expands higher margin specialty products, and captures demand for recyclable low-carbon packaging. Benign competitor landscape: major packaging peers and industrial conglomerates. Global, flexible, and rigid packaging companies. Competition is on cost, service, sustainability, credentials, and innovation. 10. Management and governance. Professional management with track record in packaging M&A and integration. Management led strategic moves to scale the business and invest in sustainable packaging R&D. Monitor. Management's integration plan for large acquisitions and capital allocation discipline following deal close. Investopedia 11. Risks: integration risk from large acquisitions execution. Cultural fit, realization of cost synergies. Input cost exposure to resin, aluminum, and energy. Hedging and pass-through vary by contract. Customer concentration and pricing pressure from big CPG customers. Regulatory and ESG risk. Packaging recycling regulations and extended producer responsibility (EPR) regimes require CapEx and product redesign. 12. Dividends/shareholder returns. Amcor maintains a quarterly dividend program and has been raising dividends in recent years. Management declared the most recent quarterly dividend in mid-August 2025. The dividend profile supports an income case but is contingent on post-deal cash flow and leverage objectives. Dividendinvestor.com 13. Insider and institutional activity. Institutional ownership is significant, typical for large caps. Monitor major holders and any insider buying, selling around acquisition milestones. 14. Technical analysis signals trader view. The stock has shown volatility around M&A and macro headlines. Traders watch volume spikes and price reaction to quarterly results and integration updates. Recent trading has reacted to fiscal 2025 results and acquisition headlines. Market Watch 15. Recent analyst ratings and news key items. Major strategic event. Amcor announced an all-stock acquisition of Berry Global, deal value roughly $8.4 billion, creating a much larger combined company and projecting material synergies and investment in sustainability. R&G. That is the dominant near-term story and will reshape revenue and margin profile if regulators and shareholders approve. Investopedia. Sustainability recognition. Received an AMCR ESG rating, reflecting strong sustainability credentials, relevant as customers and regulators press for recyclable packaging. Amcor 16. Red flags and watchlist items. Integration milestones and synergies from the Berry acquisition. Watch cadence and any pushouts. Leverage and covenant metrics post-acquisition. Check pro forma net leverage. Raw material inflation and pass-through mechanics with customers. Execution on sustainability targets and CapEx needs. 17. Investment conclusion. Suitable investor. Income quality investors who want exposure to defensive, high-visibility packaging demand, provided they accept acquisition integration risk. Bull case. Successful integration of Berry with realized synergies. Improved product mix toward higher margin and sustainable packaging, steady dividend growth. Bear case. Integration miscues, higher leverage, raw material shocks, and failure to maintain customer contracts or margins.